So if you've been keeping an eye on the tech world, you've probably been getting some seriously mixed signals from Unity software. One day, the stock looks like it's in a total free fall. The next, it's staging this shocking comeback. I mean, it's a classic case of a company telling one story while the market seems to be hearing something completely different. So yeah, let's dive in and try to figure out what is really going on here.
I mean, just look at these numbers. On the one hand, the stock has gotten absolutely hammered this year. We're talking down more than 55%. But then, bam, on a single day, March 27th, it just rockets up over 13%. So a company can't be a sinking ship and a rocket ship at the same time, right? Or can it? This slide, right here, this really nails the puzzle we're trying to solve.
And yeah, that brings us right to the big question of this whole explainer. What is actually happening with Unity? Are investors right to be so skeptical, or is the company actually laying the groundwork for some massive turnaround that maybe the rest of us just aren't seeing yet?
All right, so to really get to the bottom of this, here's how we're going to break it down. First, we'll unpack that sudden comeback. Then, we'll get a glimpse into the ambitious future Unity is painting for itself. After that, we'll pivot to Wall Street's much more skeptical take, see what big bets the company is making to change the narrative, and finally, we're going to try and make sense of these two totally competing stories.
Okay, so first things first, let's talk about that sudden jump. I mean, what on earth could cause a stock that's been struggling so much to suddenly have its best day in, like, forever?
Well, the answer, it turns out, was a pretty big surprise announcement. On March 27th, Unity told the market its first quarter revenue would be way higher than expected, coming in at over $505 million. Now, this was a huge beat compared to what they'd said before, and it sent a signal that maybe, just maybe, things were turning a corner. But the real question is this a real trend or is it just a blip on the radar? To figure that out, we've got to look at the bigger picture Unity is trying to sell.
So let's switch gears and look at things from the company's perspective. See, Unity isn't just thinking about the next quarter. Nope. They are trying to define the entire next era of how we interact with digital stuff. And they laid it all out for us in their 2026 Industry Trends Report. So according to Unity, the future really comes down to 5 key pillars. They're basically saying, hey, we're moving past the playtime, the experimentation phase with new tech, and we're getting into full-on execution. This means huge bets on blending AI and extended reality, scaling up immersive training, and even making 3D data accessible to everyone, not just specialists. It's a really ambitious vision for where the entire digital world is headed. And this is where their vision starts to feel a little less like science fiction and a whole lot more like a solid business plan. Just take that immersive training pillar, for example. Unity's partners found that training in VR can lead to a mind-blowing 230% performance improvement compared to old-school methods. You see, this isn't just a fun little gimmick. We're talking about a mission-critical tool for huge industries, everything from healthcare to aerospace.
And this quote right here, it perfectly captures what they're trying to do with AI and XR. Look, they don't just want you to see a virtual world. They want that world to be smart, to be intelligent. Just imagine, you're in a factory training sim and an AI knows exactly what you're looking at and boom, it pulls up the right repair manual. That is intelligent immersion, and it's a huge part of their vision. It's an exciting future for sure, but the big question is, does Wall Street actually buy it?
Okay, so now we have to pivot. We're going from that really optimistic vision to the cold, hard numbers of the market. Because, for all of Unity's ambitious plans, investors have been sending a very different and frankly, much more skeptical message. So if you look at the professional analysts, the feeling is, well, it's cautiously optimistic, but it's definitely not a slam dunk. Yeah, you've got a combined 75% who rate the stock a buy or strong buy, but that means a full quarter of them are just sitting on the sidelines calling it a hold. And what that tells you is that there is a major debate happening about where this company is headed.
And this chart, it lays out that debate perfectly. You've got the bulls, the optimists, on one side. They're pointing to Unity's huge presence in mobile gaming, its growth in other industries like automotive. But then you have the bears, the skeptics, and they are worried. They're looking at weak performance from the end of last year, they're seeing threats from new AI competitors, and they're pointing to forecasts that suggest revenue could actually go down this year.
And honestly, this context is just so important. When you put Unity's 55% drop this year next to its peers like Roblox and AppLovin, who are basically flat, you realize just how much the market has been punishing Unity specifically. This is not an industry-wide problem. This is a Unity problem.
Okay, so the company's got this grand vision, right? But the market is just clobbering them. So what are they actually doing about it? And that brings us to the really bold strategic moves Unity is making right now to try and bridge that gap.
So their playbook basically has 3 key parts.
First up, they're doubling down on what's actually working. We're talking about their AI-powered ad platform, Unity Vector, which, by the way, was the main reason for that recent revenue beat. Second, they're streamlining, or as the CEO calls it, addition by subtraction, selling off their China business and shutting down underperforming networks. And number three, they're doing something that most people thought was, well, unthinkable. And that is partnering with their biggest rival. Back in November 2025, Unity and Epic Games, the folks who make the Unreal Engine, they announced they were teaming up. Now, for anyone who follows the gaming world, this was basically like watching the Yankees and the Red Sox announce they were starting a team together. It was a shocking move, and it signaled a huge shift in their strategy.
And here's the thinking behind it, straight from the new CEO, Matt Brumberg. The basic idea is that a more open system, where developers have more choices, will actually grow the entire pie for everybody. It's a huge bet that working together, even with your fiercest rival, is way better than just fighting over a market that might be shrinking.
Okay, so we've got these two sides, right? On one side, you have the company's incredibly ambitious vision for the future. And on the other, you have Wall Street's really harsh, short-term judgment. So how in the world do you reconcile these two totally different stories? Well, it really all comes down to what we can call the Unity paradox. And this is the fundamental conflict that's playing out right in front of us. A company that's trying to build the technology of tomorrow while the stock market is screaming for profits today. Unity is living this paradox in real time.
So here's the bottom line. Unity's entire strategy is one massive bet. They are betting that by becoming a leaner, more focused company, one that puts all its chips on its core game engine and that high-growth AI platform, they can finally convince Wall Street that their long-term vision is actually worth investing in right now.
And that really leaves us with the ultimate question. And it's not just for Unity, but for pretty much any innovative company out there. Can a big, long-term vision survive the market's brutal, short-term verdict? Now, whether Unity's huge bets will actually pay off, who knows? But their story is a perfect, real-world example of the incredibly high-stakes gamble of innovation.